Today I got a tax question about what exactly to do about grandma's house as it relates to everybody. Camari Ellis here, the finance rebel. Y'all know I'm a tax accountant with over 30 plus years of tax experience. And today I got a question about what to do about grandma's house as it relates to taxes if it's sold. So let's check this out real quick. All right, so today I was in the Afros, let me get it right, the Afros on Fire Facebook group. And shout out to a young lady who is always watching my content. Her name is Stephanie Jones. Shout out to you, Stephanie. But she asked me a question today in the group, and I wanted to talk about this because I think it could give value to a lot of people. And so bear with me because I'm going to read this. So it says, I've got one that's confusing to everyone last night. What is the basis on an inherited house? House was never rented, just minor repairs and listed for sale. It was an argument because the house was retitled to my name. Somebody take notes. And all the forms asked if it was sold by the estate, it was exempt from taxes. Its worth is some said its worth is based. Others say the basis is what it actually sold for. Which number do I get to subtract sales expenses from to claim a loss if that is possible? The estimates and sales price are only differ by a few thousand. All right, so I wasn't totally clear on this question because there's a couple of things going through here, but as we get into this, I'll definitely walk you through it or walk you through the proper way to go through it. So I said, hey, Stephanie, I'm not totally clear. So she said to me, it had never been rented. It has been empty since I inherited it, and I have expenses for getting it in saleable condition, plus normal fees for the sale itself. What was being debated was the basis since title actually transferred to my name instead of being sold out of the deceased estate. There were six of us debating the withholding form that was part of the sale. My attorney said that the sales price is the value regardless of any estimate, but escrow didn't think that was right since the estate didn't sell the house. This is complicated, y'all. All right, so I asked Stephanie, was it okay for me to go through this? And she said, yes, so I want to go through this step by step. All right, so taxes are never straightforward, cut dry, get to a thing. It's usually complex. So there's a couple of things going. Let's go with the facts. The facts are somebody passed. The relative passed, it sounds like probably a couple years ago. We don't know. I don't know. And it sounds like they are in the process of selling the home. Now, the one point that Stephanie did make is that the property was transferred into her name. Why does that matter? We're going to talk about it in a minute. All right, so Stephanie asked a couple questions, and I think those are important. She asked, what is basis? So I definitely want to answer that. So what is basis? Basis is normally in any real estate transaction, the amount of what the property was purchased for plus any of the holding costs. That could be insurance, that could be taxes, that could be mortgage interest, not the actual mortgage payment. That could be construction, renovations, things like that. So you add all those together, and that typically is. Now, when we talk about real estate investors and we talk about depreciation, then it gets a little bit more complicated, but we're going to leave depreciation out of this situation right now because I'm just going off what Stephanie said. And she said that, there's family members, six of them selling a home. The home has been kind of sitting since the relative passed. Again, the title was transferred to Stephanie. I'm not sure at what point, but it sounds like before the date of death of the ancestor and the family member who passed. So normally, to determine basis for a past family member, the basis based on, like the attorney said, the basis would be the value of the property at the date of death. Everybody, please fact check this. I'm certain that it is because I work on estate taxes all the time. But the value is determined by the date of death for the value of the property. So you normally would have to go back and look at either city records to see what the assessed value is of the property. Sometimes you would get real estate records and go back and look and see what the value is or what other properties were sold for during that time. It can get a little tricky, but you have to have on a basis for basis, right? You have to get a basis on what exactly this was sold for, okay, or the rationale of what it was sold for, all right? And I'm looking back because I'm also reading the Facebook message as well. All right, so yes, technically it is. However, the property did not transfer from the estate. It was already in your name. You already had established ownership of the property. Now, here's the problem. What did you buy the property for? A lot of times when it comes to family members, these properties are sold for $1. Sometimes, not always. But if it is, it's the basis is the dollar. That's the sale of the property at the time. That's what you paid for it, plus whatever the expenses were to get it in sellable condition. So I don't know if you had to get it paint, get the grass cut, things like that. All those things matter. And so, but yes, that can go towards basis. So let's just say it was $1. You brought it from Nana or Pop, whoever it may be, and then you spent another I don't know, $10,000 on getting it in sellable condition. So the sellable condition will be $10,000 plus $1. So that's $10,001. That's what your basis is. Okay, keep that in mind. Keep that in mind. So here's the problem: you got 6 relatives. So you got 6 relatives who also are getting an interest share in this, right? So it's not necessarily coming out of the estate. It's you own it. But then what happens when we are going to disperse all this cash? So what I would recommend is when you file your tax, well, before you file your taxes, you issue 6 separate or 5 separate 1099s, 1099 NECs to your relatives and disperse the profits to them equally or whatever percentage that y'all have worked out. Okay, so once you disperse that, then you're only responsible for the profit that you got to keep in your pocket, and you pay taxes on that. Now, I've seen situations where people don't want that, and it's all under the table, and it become a nightmare. So you don't want to do that. So issue the 1099s for the sale, for the proceeds of the sale of the property when you do go to sale. And you can instruct the title company to handle that. You probably would need get them, you and them, to do some W-9s. I wouldn't consider this an exempt transaction, and I personally wouldn't do this tax return, the estate tax return, using the sale because the estate didn't actually own the sale based on what you're telling me. And the reason why I'm saying not to do it with the state, the estate doing the tax return is because estate tax rates are higher than personal tax rates. So I would do it that way. At the end of the day, do the 1099s. When you file your taxes, make sure you report the sale of the property on your local, federal, and state, wherever it's a place that you had to do taxes for, and report it that way. Okay? But Stephanie, let me know if I got this right or if I got it wrong. But I believe I have the fact pattern correct, and I laid out everything. But again, just to reiterate, for you and your family, just lay out everything with them because I see them, not them, but I see family members sometimes come to blows over money when we talk about grandma's house or pop-up house or whoever's house it may happen to be, right? But just lay it all out, be fully transparent, let them know what the costs were that you had to do for the sellable conditions, list them all out, and keep a track record of that, which it sounds like you already did. So when you do your taxes, when you report it on your personal taxes, you can then list that as basis and part of your sales expense, because also sales expense also talks about the money that's paid towards the realtor, if the realtor was involved with handling the sale. Some of the other items that were on the title sheet or the HUD one, as they call it, there are some of those things that are tax deductible as well as part of the sale of the expenses. Okay. Now, this video went a little longer than what I expected. I hope everybody got clarity on this, especially you, Stephanie. But if anybody has any tax questions, feel free to email me at taxes@phillytaxteam.com. And if I get a chance, I will answer them on the channel here. But until the next time, I'm Camari Ellis, tax accountant with over 30 years of tax experience. And I'll see you the next time with any tax problems you may have. So long.